Welcome back to the deep dive. Today we're going to try to untangle a bit of a knot, a real head-scratcher in the stock market.
Oh, that's intriguing. Lay it on me.
It's Mercado Libre.
Mercado Libre, huh? Okay, I'm listening. The Latin American Amazon, right? E-commerce, and they're big into FinTech too.
You got it. And that's what makes this so puzzling. We've got a whole pile of info here, financial reports, analyst opinions, news articles, even snippets from earnings calls and executive interviews.
Sounds like you've done your homework, so what's the mystery?
Well, their stock just took a serious nosedive.
Nosedive. How serious are we talking?
Over 16% in just one day.
Ouch. Okay, that's definitely attention-grabbing. But wait, isn't Mercado Libre supposed to be doing really well?
That's the thing. On paper, they had a phenomenal quarter.
All right, now I'm really curious. Break it down for me. What does Mercado Libre actually do? I mean, I know they're the Amazon of Latin America, but what's the full picture?
Sure, so think of it like this. Imagine Amazon, but completely tailored to Latin America. It's not just an online marketplace either. They've got Mercado Pago for payments, logistics, and they're even branching out into financial services.
Ah, I see. So they're building a whole ecosystem. Smart move.
Exactly. That integrated platform gives them a massive edge, what's called a wide economic moat.
Right. Hard for competitors to muscle in on that.
Which makes this stock drop even weirder, because they just posted some seriously strong Q3 results for 2024.
All right, spill the beans. What kind of strong are we talking about?
We're talking 35% year-over-year revenue growth, booming sales, especially in Brazil and Mexico. The numbers look fantastic.
So they're killing it. But the stock's tanking. Something doesn't add up.
It's like they aced their exams but got grounded anyway. It's the profit margins.
Ah, profit margins. Okay, so their revenue is skyrocketing, but their profits aren't keeping pace.
That's the gist of it. And it's got some investors spooked, wondering if this growth is actually sustainable.
Makes sense. Investors want to see that bottom line growing.
Right. And it all boils down to one little phrase. Margin compression.
Margin compression. All right, so for those of us who aren't financial wizards, break that down a bit. What does that actually mean?
Sure. In simple terms, it means even though they're bringing in a ton of money, their profits aren't growing at the same rate.
Got it. So it's not that they're losing money, but their profitability isn't as strong as some might expect given that crazy revenue growth.
Right, like they're spending a lot to make that growth happen.
Well, they are making some big moves, right? I've been reading about their credit card expansion and all those new fulfillment centers they're building.
Exactly. It's not like they're burning cash for fun. They're pouring money into these strategic initiatives, hoping they'll dominate the market in the long run.
Makes sense. So it's kind of like they're building a bigger house, but all that construction is cutting into their budget for now.
That's a great analogy.
Yeah.
And they're hoping that bigger, better house will mean way more value down the road.
And they've got some cool new stuff to attract tenants, right? I saw something about a loyalty program.
Yeah, Meli Mas. It's like a VIP experience with different tiers. Plus, they've got Meli Delivery Day to try and boost customer loyalty.
Trying to build that Amazon Prime kind of stickiness, I see. Smart.
And don't forget their FinTech platform, Mercado Pago.
Oh, yeah, that's been a huge success story for them, hasn't it?
Huge. Total payment volume is off the charts. And to top it off, Fitch, the credit rating agency, just upgraded Mercado Libre to investment grade.
Investment grade. Now, that's a term I've heard thrown around, but I'm not always sure what it really means for, everyday investors.
Well, think of it this way. Imagine a friend asks to borrow money. If they've always paid you back on time and have a steady job, you probably feel pretty good about lending to them, right?
Yeah, definitely lower risk.
They're investment grade in your book. That's what Fitch is saying about Mercado Libre.
Yeah.
They see them as financially solid and reliable.
Okay, that makes sense. So we've got this company, revenue's booming, big investments for future growth, a super popular payment platform, and they've gotten the thumbs up from a major credit rating agency. Sounds almost too good to be true. There's got to be a but coming, right?
So you know it. Nothing's ever a sure thing, especially in investing. In this case, one of the biggest risks for Mercado Libre is, well, good old-fashioned currency swings.
Ah, currency fluctuations. Always a headache for international companies.
Especially when your business is spread across multiple countries in Latin America. When those currencies bounce around, it can really mess with their bottom line.
Right, because at the end of the day, they have to report their financials in US dollars. So if the Brazilian real takes a hit, their earnings might look smaller even if their business in Brazil is doing well.
Exactly. And it's not just Brazil. You've got to factor in the overall economic situation in all of Latin America.
Yeah, it can be a bit unpredictable down there. Lots of moving moving parts.
Exactly. Think inflation, political changes, all that jazz.
Stuff that can make consumers tighten their belts, which isn't good news for a company like Mercado Libre.
Exactly. And on top of those economic factors, let's not forget about the competition.
Oh yeah, Amazon, they've got their sights set on Latin America too. And they've definitely got the muscle to make things difficult.
Exactly. And then there's that whole credit card expansion thing. It's fueling a lot of their growth right now.
Yeah, they're really pushing into that space.
But it's also making some analysts nervous, wondering if it's happening too fast, putting pressure on what's called NIM spreads.
Hold on, NIM spreads. That sounds a bit technical. Can you give us a quick, plain English version of what that is?
Sure. Think of it like running a lemonade stand, right?
Yeah.
You buy lemons and sugar, sell lemonade, and the difference between what you spent and what you earn is your profit margin.
Right. Basic lemonade economics.
NIM spreads are kind of like profit margins for banks. It's the difference between the interest they earn on loans and the interest they pay on deposits. Since Mercado Libre is lending more and more money through their credit cards.
Ah, I see. It's impacting those spreads, potentially squeezing their profits a bit in the short term.
Exactly. So while there's a lot to be excited about with Mercado Libre, there are definitely some risks involved.
Right. It's never a one-sided story.
And before we jump to any conclusions, I think it's time to hear what the analysts are saying.
Yeah, good idea. Let's get those different perspectives on the table.
Because it's a pretty mixed bag out there.
So no clear consensus. Everyone's got a different take.
Pretty much. It's kind of like trying to predict the weather, lots of variables at play.
That makes sense, especially with a fast-growing company like this, operating in emerging markets. Lots of uncertainty to factor in.
Exactly. But before we go any deeper, I think we need to dig into those Q3 results and see what actually happened.
Yeah, let's get into the nitty-gritty. Numbers don't lie, right?
Exactly. Let's see if we can spot those clues that have those analysts so excited or so worried.
All right, I'm ready to dive in.
All right, well, first things first. Mercado Libre pulled in a whopping $5.3 billion in revenue this past quarter.
5.3 billion? Whoa, that's massive.
Yeah.
But as we've learned, revenue isn't everything. What about the profits?
Well, that's where things get a little tricky. Their EBIT margin, basically their operating profit, as a percentage of revenue shrank compared to last year.
So even though they're making more money overall, a smaller percentage of it is actual profit. Starting to see why some analysts might be on edge.
Right, it's a balancing act. Investing for the future while keeping investors happy with profits today.
Mm-hmm.
And it seems to be that tension that's behind the stock drop.
Classic short-term pain for potential long-term gains scenario.
Exactly. And it's up to each investor to decide if they believe Mercado Libre can pull it off. But before we even get to that, we should probably look at how their different business segments are performing.
Good point. Break it down for us. How did their commerce side do? That's still the core of their business, right?
It is, and it's still going strong. They saw really healthy growth in GMV, their gross merchandise volume.
Just to remind me, GMV is basically the total value of everything sold on their platform, right? Like their overall sales volume.
Exactly. And in Brazil, their GMV shot up by a massive 34% compared to last year.
Wow, 34%. They're clearly dominating that market.
They are. And in Mexico, it was up 27%. Even Argentina hit record sales, over 60 million items sold in just 3 months.
So their commerce business is firing on all cylinders. What about Mercado Pago, their FinTech side? I know that's been a major growth driver for them too.
Mercado Pago is absolutely on fire. Remember we talked about total payment volume earlier. Theirs hit a mind-blowing $50.7 billion in Q3.
50.7 billion. Whoa, they're not just processing payments on their marketplace anymore. They're a full-fledged financial services platform.
Right. Digital wallets, credit, even investments. It's becoming a major part of their overall business.
Which brings us back to their big push into the credit market. We know that's a big part of their growth, but also a potential source of worry for some analysts. What's the story there? How big is their credit portfolio?
Well, it's grown by a staggering 77% year over year.
77%. That's huge, but also potentially risky, right?
Exactly. Lending always comes with risks, especially when you're growing that fast. Their credit portfolio now stands at a cool $6 billion.
$6 billion. Yeah, they're definitely playing for high stakes. But didn't we see that the president of Mercado Pago, Osvaldo Gimenez, bought more stock recently?
We did. It could be a sign that he's confident in their strategy and risk management, but it's still a gamble. There's no guarantees in the stock market.
True enough. Okay, so let's recap for a second. Mercado Libre is posting incredible revenue and GMV growth. Their strategic investments are fueling that growth, but also putting pressure on their profits.
Exactly. It's this push and pull between investing for the future and keeping investors happy with solid profits today.
And that tension, that balancing act, is why their stock took a hit despite those seemingly good numbers.
Exactly. It's a classic short-term pain, potential long-term gain situation.
Yeah.
And it's up to each investor to decide if they think Mercado Libre can pull it off.
Right. And one of the keys to that success, I think, is how well they can build out their logistics network.
Oh, absolutely. They're pouring billions into expanding their fulfillment centers, especially in Brazil.
Makes sense. Latin America is a huge region, lots of logistical challenges to overcome.
Exactly. And if anyone can crack the code on logistics in Latin America, it might just be Mercado Libre.
Well, let's dive into that next then, because if they can nail that, it could be a game changer for them. All right, let's talk logistics. Building a delivery network from scratch, that's a massive undertaking.
It is, especially in a region as complex as Latin America. We're talking vast distances, sometimes shaky infrastructure, a whole maze of customs regulations.
Yeah, not for the faint of heart. So what's their game plan? How are they tackling this logistical puzzle?
We are going all in, pouring billions of dollars into building out their own network of fulfillment centers, especially in Brazil.
It's like they're trying to build their own mini Amazon, right? Their own delivery machine, but specifically designed for the quirks of Latin America.
That's exactly it. And it's not just about keeping up with the competition. It's about conquering a market where logistics can be a nightmare.
Right. They want to make buying and selling on Mercado Libre as seamless as possible, even in places where deliveries have traditionally been a headache.
Precisely. And it's a long-term game.
Yeah.
Think about the potential as more and more people in Latin America come online and start shopping. If they can nail the delivery side.
They'll be in an incredible position. But it's a big gamble, right? Takes a ton of money and time to build a network like this.
Oh, absolutely. It's a huge bet. But from everything we're seeing, they're all in.
They're essentially saying, we think this is the key to massive growth, and we're willing to put our money where our mouth is.
That's the sense I'm getting too.
Yeah.
And it's not just about brute force, throwing money at warehouses. They're getting smart about it.
Oh, yeah. How so?
Using data analytics, machine learning to forecast demand, optimize delivery routes, even exploring things like drones for last-mile delivery in some areas.
So it's about efficiency, using technology to make their network as nimble and responsive as possible.
Exactly. And it all ties back to that core idea of creating a seamless, delightful experience for both buyers and sellers.
That stickiness that keeps people coming back.
Exactly. But let's not forget, they're also pouring resources into some pretty cool product innovations.
Oh, right. They're not just a logistics company. They're constantly evolving their platform. What have they been up to?
Well, for starters, remember that loyalty program we mentioned, Meli Mas?
Yeah, the one with the tiers, kind of like a VIP program.
Right. Think Amazon Prime, but with a Mercado Libre spin. Free shipping, cashback rewards, special discounts,
Yep.
even access to exclusive events.
Creating that sense of community, making people feel special.
Exactly. And they've got different tiers, a basic and a premium, just like those fancy airline loyalty programs.
So you can level up your perks. Smart move.
It is, and they're not neglecting the actual shopping experience either.
What are they doing on that front?
Constantly refining their website and app, making them easier to use, more enjoyable to browse. Personalized recommendations, smooth checkout processes, search functions that actually work.
It's all about removing those points of friction, making the whole experience feel effortless.
Exactly. And they're tailoring it to different categories too. Like in their auto parts section, you can book appointments with mechanics directly through the platform.
Handy. And in their beauty section, I saw they have a virtual makeup try-on feature.
Yep, trying to bring some of those in-store experiences into the digital world.
Makes sense. So they're focusing on the shoppers, but what about the sellers?
Oh, they haven't forgotten about them. New advertising tools, detailed analytics dashboards, better seller support.
They're building an ecosystem for businesses to thrive within their marketplace.
That's a great way to put it. The more successful the merchants, the more successful Mercado Libre becomes.
It's a win-win. But let's be real, they're operating in a region that's going through this massive digital transformation.
Exactly. Latin America is becoming a major player in e-commerce and FinTech, and Mercado Libre is at the forefront of it all.
They've got a front row seat to a huge growth story. But it's not just about being in the right place at the right time. They need to be able to capitalize on it.
And they seem to have what it takes. The vision, the execution, The resources, it's a classic disruptor playbook.
They've got a lot going for them. But, there are those challenges we keep coming back to. Can't ignore those.
Oh, absolutely. The competition's fierce. The Latin American market can be a wild ride.
Right. Currency fluctuations, political uncertainty, all that fun stuff.
Exactly. And then there's the whole regulatory landscape, which is still evolving.
Yeah, rules of the game are still being written for e-commerce and FinTech in a lot of these countries.
It creates a lot of uncertainty, which always makes investors nervous. But even with all that, Mercado Libre has some big things working in their favor.
Like what? Give me some reasons for optimism here.
Well, first off, they're the undisputed leader in Latin American e-commerce. Build a brand that people trust, millions of loyal customers.
It's huge. Brand recognition and customer loyalty are incredibly valuable. Tough for competitors to replicate.
Absolutely. And they've proven they can adapt, innovate,
Hmm.
which is crucial in a fast-changing market.
Right, they've weathered some storms before. And let's not forget that leadership team. They've got some serious experience.
To do. Marcos Galperin, the CEO, has been there from the beginning. Osvaldo Gimenez is a fintech whiz, and Ariel Sarstein, the commerce guy, is all about making that shopping experience top-notch.
So even with those bumps in the road, they seem well equipped to handle them. But I think it's time to get a bit more granular, zoom back in on those risks and challenges.
Let's do it. Got to see the full picture, right? The good and the bad.
Exactly. Got to weigh those pros and cons.
So let's talk about those risks, starting with the elephant in the room. Currency fluctuations.
Always a headache for companies operating across multiple countries with different currencies.
Exactly. And in Latin America, those currencies can be volatile.
Right. It adds an extra layer of unpredictability. So even if their business is doing well locally, a sudden shift in exchange rates could make their earnings look weaker when reported in US dollars.
Exactly. They do have some hedging strategies to try and minimize that impact, but it's still a significant risk investors need to be aware of.
And then there's the whole macroeconomic environment in Latin America. We touched on it before, but it's worth digging a little deeper.
Right. The region has a history of economic and political ups and downs. Inflation, rising interest rates, political instability, all of that can make consumers nervous and impact spending.
Yeah, if people tighten their belts, companies like Mercado Libre are going to feel it.
Exactly. And they've shown they can navigate those cycles in the past, but it's still a factor that's always lurking in the background.
And let's not forget about that increasing competition. The Latin American e-commerce market is getting crowded, and Mercado Libre's got a target on its back.
It does. You've got Amazon, obviously, they're a major threat.
Right, they've got the resources and the experience to be a formidable opponent.
They do.
Yeah.
But it's not just Amazon. There are also local players emerging, companies that really understand the nuances of specific markets or categories.
So Mercado Libre can't afford to get complacent. They have to keep innovating, keep finding ways to stand out from the crowd.
Exactly. And that's especially true in the fintech space, where the competition is arguably even fiercer.
Oh yeah, you've got countless fintech startups popping up left and right, each with their own unique twist. And then you've got the traditional banks trying to modernize and get in on the action.
So Mercado Pago is facing a multi-front war. They've got to fend off the nimble startups while also holding their own against the established giants.
It's a tough balancing act, but it's also an exciting space to be in.
It is. And then there's the regulatory wild card. As e-commerce and fintech continue to boom in Latin America, governments are trying to figure out how to regulate these new industries.
Yeah, the rules are still being written, which creates a lot of uncertainty for companies like Mercado Libre.
Exactly. They need to be prepared to adapt quickly as new regulations come into play, and that can be costly and complex.
It's like trying to build a house while the building codes are constantly changing. You never quite know what to expect.
Great analogy. And we've already seen some examples of this. Some countries are talking about digital taxes, others are tightening up data privacy rules.
So Mercado Libre has to stay agile, keep their ear to the ground, and be ready to adjust their course. It's a lot to juggle.
It is. But even with all these risks and challenges, it's important to remember that Mercado Libre has a lot of strengths.
Right, we talked about their market leadership, brand recognition, loyal customer base.
Exactly. Those are huge advantages that shouldn't be underestimated. And they've got a proven track record of innovation and execution.
They've shown they can get things done, and
Yeah.
they've got that experienced leadership team at the helm.
Exactly. So while there are definitely bumps in the road, Mercado Libre has a lot of reasons to be optimistic.
It's a fascinating case study. A company at the forefront of a major transformation, facing both incredible opportunities and daunting challenges. I'm eager to see how it all plays out.
Me too. But before we start making predictions, I think it's time to go behind the scenes and hear what the company itself is saying. Let's take a closer look at their recent earnings call.
Yeah, let's hear it straight from the horse's mouth. What are the people running the show telling investors?
Let's dive in and find out.
Okay, let's do it. I'm all ears.
All right, so we've got a glimpse into what the numbers say, and we've talked about the big picture. Now let's see what MercadoLibre's executives are telling us about their performance and their plans. We're going to dissect their recent earnings call and see what insights we can glean.
I love these earnings calls. It's like getting a sneak peek behind the curtain.
Exactly, is where the rubber meets the road. And one of the key takeaways from this particular call was a strong sense of confidence from the leadership team, even with all the talk about those profit margin pressures.
So they're still bullish on the future of e-commerce and fintech in Latin America, not shying away from the challenges.
Not at all. They're doubling down on their belief that their strategic investments are going to pay off big time in the long run, especially their investments in logistics, technology, and new product innovations.
It's like they're saying, trust us, we've got this.
Exactly. They're playing the long game and not letting short-term fluctuations shake their confidence.
Now, they are really pushing into the credit market. Did they address that in the earnings call? I'm sure analysts had some questions about that rapid expansion and the potential impact on margins.
Oh, absolutely. Analysts were definitely pressing them on that. They wanted to know how MercadoLibre plans to balance that aggressive growth with maintaining profitability.
So what did they say? How are they defending their strategy?
Well, they acknowledged that there's going to be some short-term pressure on their margins, but they reiterated their belief that the credit business is going to become more profitable as it scales.
Essentially, they're betting that the sheer volume of loans they're making will eventually offset the lower profit margins. It's a classic scale wins argument.
Exactly.
Yeah.
And to reassure those nervous analysts, they emphasize their commitment to responsible lending practices and minimizing credit risk. They're not trying to grow too fast and end up with a bunch of bad loans.
Got it. So it sounds like they're walking a tightrope, trying to find that balance between aggressive growth and managing risk.
That seems to be the theme. And another hot topic, of course, was their logistics expansion.
Right, that massive build-out of fulfillment centers, especially in Brazil. What were they saying about that?
They gave updates on their progress and highlighted the benefits they're already seeing. Faster delivery times, lower shipping costs, happier customers.
So they're starting to see some positive results from those investments.
They are. And they're not stopping there. They're planning to expand their logistics network into other key markets as well. They're thinking big.
Ambitious, for sure. Now, I have to ask, what about the Amazon question? Did they address the elephant in the room? How are they planning to compete with a giant like that?
Oh, they definitely addressed it. And they didn't shy away from the challenge. They emphasized their deep understanding of the Latin American market, their strong brand recognition, and their loyal customer base.
They're basically saying, we know this market better than anyone, and our customers love us.
Exactly. They also pointed to some of their unique offerings, like their integrated FinTech platform, which Amazon doesn't have. And they highlighted their focus on empowering local sellers.
Smart strategy. Don't try to beat Amazon at their own game. Play to your strengths.
Exactly. And then, of course, there's the whole macroeconomic question. Inflation, currency swings, political uncertainty, all of that could impact their performance.
Right. Those are factors that are largely out of their control. Did they offer any insights into how they're approaching those challenges?
They did. They acknowledged the impact of those headwinds, but they also expressed optimism about the long-term economic prospects of the region.
So they're not panicking, they're adapting.
Exactly. They're adjusting their pricing strategies, streamlining their operations, and using financial tools to hedge against currency risks.
The classic control what you can control approach.
You got it. And overall, the tone of the earnings call was one of confidence. They believe they're on the right track, and their investments will deliver in the long run.
A bold stance. It'll be interesting to see if their vision translates into reality.
It will. But I think it's time to go a bit deeper now. Hear from the key players themselves. Marcos Galperin, the CEO. Osvaldo Jimenez, the fintech leader. Ariel Starfstein, the commerce expert. Let's see what they have to say.
Yeah, let's get their perspectives. I'm always fascinated by what those at the top are thinking.
All right, so let's start with Marcos Galperin, the CEO and co-founder of Mercado Libre. He's been there from the very beginning, watching this company grow from a small startup to a Latin American powerhouse.
Quite a journey. So what's his take on the company's long-term vision? What's driving him?
Well, in a nutshell, he's all about building a sustainable and profitable business that also has a positive impact on society. He's not just chasing profits. He wants to create something that makes a difference.
A blend of ambition and purpose. I like it.
Right. He's incredibly focused on innovation, on constantly pushing the boundaries in e-commerce and FinTech. And he's obsessed with delivering an exceptional customer experience.
Because he knows that happy customers are loyal customers. Classic business wisdom.
Exactly. And of course, he's not afraid of a little competition.
Yeah.
He seems very confident that Mercado Libre can go head-to-head with the best and come out on top.
He's got that fighting spirit, and it sounds like that attitude filters down throughout the entire company. Now, what about Osvaldo Jimenez, the president of Mercado Pago? He's the guy leading their charge into FinTech, which is such a hot space right now.
He is, and he's incredibly bullish on the potential of FinTech to transform lives in Latin America. Many people there lack access to traditional banking services, so Mercado Pago is stepping in to fill that gap.
Providing financial inclusion to millions who've been left out of the traditional system. That's a powerful mission.
It is, and Jimenez is incredibly proud of the progress they've made. He talked about that huge demand for their credit products and the positive impact it's having on their financials. But he also acknowledged the need to manage that growth carefully. They don't want to repeat the mistakes of others who expanded too quickly and ended up with a portfolio of bad loans.
Right, got to balance that ambition with caution.
Exactly.
Yeah.
And then there's Ariel Sarstein, the president of commerce. He's the guy making sure that online shopping experience is as smooth and enjoyable as possible.
He's the one focused on making sure that everything from browsing to buying to delivery is seamless. What are his top priorities?
Well, he's all about speed, selection, and personalization. He wants to make sure that customers can find what they want quickly, that they have a ton of options to choose from, and that the whole experience feels tailored to their individual needs.
He's taking those best practices from e-commerce and applying them to the unique context of Latin America.
Exactly. He talked about their efforts to improve delivery times, expand their product selection, and really personalize the shopping experience. He's also passionate about supporting local sellers and giving them the tools to succeed on the platform.
So we've got this leadership team with a clear vision, a commitment to excellence, and a deep understanding of the Latin American market. It's an inspiring story, and it's clearly captured the attention of investors. But let's step back for a moment and think about what all of this means for the average investor, someone who's trying to decide if Mercado Libre is a stock worth buying.
Okay, let's cut through the noise and distill it down to those key takeaways.
Perfect. What are the essential things investors should consider?
Well, first and foremost, Mercado Libre is riding two of the most exciting waves in the world right now, e-commerce and FinTech. They're not just in the right place at the right time, they're shaping these industries in a region that's ripe for disruption.
They're the pioneers, the trailblazers.
Exactly. But with any high-growth company, there are risks.
Yeah.
Currency fluctuations, economic and political uncertainty, competition. These are all factors that investors need to consider.
Right, it's not a risk-free investment. But on the flip side, you've got a company with a dominant market position, a strong brand, and a track record of innovation.
Exactly. And they're investing heavily in their future. That logistics network could give them a real edge, and they're constantly developing new products and services to keep their customers engaged.
They're playing the long game. It's a classic high-risk, high-reward scenario.
It is. The potential is enormous, but the challenges are real.
So it all comes down to each individual investor's assessment of those risks and rewards.
Exactly. There's no right or wrong answer. It depends on your investment goals, your risk tolerance, and your confidence in Mercado Libre's ability to execute their plan.
It sounds like you need to do your research and make an informed decision. Don't just jump in blindly.
Right. And that's what we've tried to do in this deep dive. Provide you with the information, the insights, the different perspectives, so you can make your own assessment.
Great job.
Thanks. We've analyzed their financials, dissected their strategies, heard from their leadership. Now it's up to you to decide what you think.
But regardless of whether you think Mercado Libre is a buy, a hold, or a sell, hopefully this deep dive has sparked your curiosity.
Exactly. We want to empower you to be informed and confident investors no matter what you're investing in.
That's what it's all about. And if you enjoyed this deep dive, you know what to do.
Hit that subscribe button, ring that notification bell, and join us for future deep dives into the world of business and finance.
We'll be exploring other companies, industries, trends, all the stuff that's shaping the world around us.
We're here to help you make sense of it all.
So until next time, keep learning, keep exploring, and keep diving deep.
Thanks for joining us on this deep dive into Mercado Libre.